Josh Duvall, Certified Financial Planner, Registered Tax Preparer from joshuaduvall.com, and today I'm bringing you a video about the 5 benefits of an HSA as a tax shelter. So the reason why I wanted to bring this video to you is I was just having a conversation with a client about it. I run a financial planning and accounting firm, and I was just talking with a client, high-income earner individual, actually a family, that's looking for additional ways to save on their income tax and also save for the future. Now, if you've done any sort of investigating on IRAs, Roth IRAs, 401ks, etc., you know that there are limits. There's contribution limits, there's income limits, there's things that can move you out of tax favorable investment vehicles as your income starts to grow. In this case, as an HSA, the reason why you'd want to look at this as a high income earner, number one, is because there is no income limit on tax deductible contributions. What does that mean? It means unlike a Roth IRA where you have to make below a certain level in order to even contribute to one, or a tax deductible IRA, there's rules about who's in a 401k, you or your spouse, how much money do you guys make, are you able to get a deduction in the current year for your contributions. That also goes away the higher income you earn. It's not like that. In an HSA, you're able to make tax deductible contributions in the current year regardless of your income. So straight away that should give you an idea that, hey, this may be for me. Number two, it's tax deferred. So just like a 401k, just like an IRA, the money that you put in, as it grows, as you have investment growth, as you make trades or transfer accounts to something that's lower fees or whatever, there's no taxes being paid along the way. As long as you follow the rules, just like an IRA or a 401k, you're not paying taxes as you go, right? That's separate from like a brokerage account or a taxable account where every time you make a trade, you might have to pay capital gains tax. This isn't like that. This money grows tax deferred just like an IRA or a 401k. The third thing you need to realize is that while you're investing in an HSA, all of your qualified medical expenses can be paid tax-free from the distributions. So regardless of your age, if you have a qualified medical expense, this would be a surgery, a medical treatment, I mean there's a pretty broad answer for what a qualified medical expense is. You can look it up on the IRS website. You're able to pay those from this account tax-free. So that's a pretty sweet deal, right? You're putting the money in, you're getting a tax deduction in the current year. It's growing, and all of that growth is happening tax deferred. And if you have a qualified medical expense, you can pull from this account and pay that tax free. The fourth thing that I think is really important to recognize, and this is kind of where this HSA loophole becomes a retirement planning vehicle for high income folks, is once you hit age 65 and you're automatically enrolled in Medicare, this account converts to similar to an IRA, meaning you can pull the money for any expense, not just qualified medical expenses, for any expense without facing that hefty 20% tax penalty. Now, you are going to pay income taxes just like an IRA or a 401k in retirement. You pull the money out to spend on a vacation, you're going to have to claim that withdrawal as income. But unlike IRAs, 401ks, there are no RMDs. That's the fifth feature of this HSA. No required minimum distribution, RMD. Now with the CARES Act, they moved that age from 70.5 to 72.5. But what that means is you don't have to worry about this account having to be forced drawdowns throughout retirement in order to increase your taxable income. You have to do that with other tax-deferred retirement vehicles, not with an HSA. You can continue to pay your qualified medical expenses, and you can use it for other expenses without any penalties. You'll just be paying income tax like normal. Now, the reason why I bring this up is because for folks who are looking for tax deferral, for tax favorable retirement planning or investment opportunities, but they're not quite ready to jump into real estate or to look at opening a separate business or joining a partnership or anything like that, setting up an S corporation. They don't want to do any of that. They're looking for something that's a little bit easier to administer. This is definitely the opportunity for you. And I think something that you really need to consider is kind of the one main caveat to the whole picture, and that is a high deductible health plan. So if you have an insurance plan, through health insurance plan, through your employer or through your spouse or whatever it may be, that plan has to meet specific guidelines. In 2020, a high deductible healthcare plan has to have a deductible of at least $1,400 for single coverage or $2,800 for family coverage. So that's $2,800 as an annual deductible to cover a whole family. Now, depending on your coverage amount, your annual expenses could run as high as $6,900 for an individual or $13,800 for family coverage because you have out-of-pocket maximums. So you got to kind of pay attention to what that difference might be. But again, just like your premiums would have been going pre-tax to pay for a health plan, the money that you're saving in this HSA can be withdrawn for qualified medical expenses. So even if you have a higher deductible on your insurance plan, this is for people who are maxing out this type of account. Cash flow shouldn't be an issue. If you're thinking about an HSA as a retirement account, you're not worried about cash flow. You're not worried about how are we going to pay our medical expenses. You have a high enough income and great enough assets to be able to deal with that. This is again for folks who are looking to contribute on a tax deductible basis now, tax deferred growth, and then tax favorable treatment in retirement. And when you're thinking to yourself, okay, well, how much can I put away? For the year 2020, the contribution limit is $3,550 for self coverage for individuals and $7,100 for families. Now, kind of thinking about the math, how much, $7,000, that really doesn't seem like that much. What is that really going to mean to me over time? Well, I did some basic math for you, and it's kind of interesting. Let's say that you put away the maximum, $7,000, we'll just call it, and even though these numbers are adjusted for inflation, they go up every year. Let's just assume that number stays at 7,000, right? So you don't max out even as that number grows over time. You just stick with $7,000 a year to make it easy. You invest it aggressively, you get 7% average annual return over 25 years. So again, $7,000, let's say you're 40 years old, you're going to do this till you're 65, Medicare age. So you go 25 years at $7,000 a year at 7%. What does that number look like? Well, it's more than $440,000. $440,000 in additional retirement savings that can be used tax-free for qualified medical expenses or at age 65 and over as retirement spending money. That's an unbelievable benefit. And again, that doesn't count what you're saving along the way. That $7,000, if you're in one of those higher marginal income tax brackets, not only could that reduce you and bring you down into a lower bracket, but again, that $7,000 is reducing your income dollar for dollar, which reduces that top line tax that you're paying based on whatever that percentage is. So you need to understand the benefits of this are something that high income earners, folks who are looking for tax shelters, this is something they need to seriously consider to take advantage of. So if you want to talk more about this, if you want to ask questions or even kind of think seriously about maybe putting together a financial plan or talking with a certified financial planner about your tax and retirement planning ideas, would be happy to do that with you. Feel free and shoot me an email, josh@joshuaduvall.com, or you can visit my website, joshuaduvall.com. Hit the like button, subscribe, share this video with your friends. Thanks so much for your time. I hope you have a great day.